What's going on, everyone? It looks as though many of the things I've been talking about in these weekly market updates are playing out, and in this week's episode, we'll take a look at the latest dominoes to fall and what you need to keep an eye on over the next several weeks as buyers and sellers. So let's get started. Hey, thanks for joining me today. I'm Rick Harrison with MVP Realty in Southwest Florida, and on this channel, I bring you the latest market news so you can make better decisions when it comes to buying, selling, and investing in Southwest Florida real estate. If you're new to the channel, welcome, and if you haven't already done so, please consider subscribing and hitting that bell so you don't miss out on the latest data, tips, and news, keeping you ahead of the market trends. If you've been watching my show for the last few months, you may be noticing many dominoes I've been talking about have started to line up and fall. Things like layoffs, inventory increases, buyer demand falling, and more. So in this week's episode, I want to start getting you prepared for things that may be around the corner as both buyers and sellers, so you can move forward with your plans in the shifting market we now find ourselves in. I'll dive deeper into those this week's headline highlights, but first let's take a look at the 7-day local market update. Alright, so let's get started with the 7-day market update. So this is week over week. So Monday, from last Monday to this Monday, we had 912 new listings on the market last Monday. That is up to 933 this week. That's up 2%, which is right along with the trends we have been seeing. Inventory has continually increased for the last 8 weeks in a row now. Solds went from 960 last week to 940 this week. That's down 2%. So now we're seeing a divergence in the new listings to the actual solds. And right in line with that is the pendings. Went from 1014 last week to 929 this week. That's down 9%. So again, that's showing us that the buyer demand is really decreasing quite significantly. And I think with the interest rates continuing to climb, that's going to just continue as we have been seeing. Two stats I did want to point out this week back on the market. It only went from 207 to 212 this week, but still 212 is quite a significant increase from the previous numbers we were seeing, which were in the low 100s over the last several months starting in January. Again, also another stat to keep an eye out that we have been watching is the price decreases, which went from 671 to 652. While that is a decline of just a little under 819 properties, 652 is now second highest, only to last week's 671. So we are still hitting pretty close to record highs as far as price decreases, and that is only that's only being exacerbated even more by the current market conditions with buyer demand falling, interest rates rising, and on top of that, more inventory coming on the market. So this has now, all of these stats have become trends. So we'll just have to keep an eye and see how it continues to shape up in the weeks and months ahead. But I do think we are starting to see the beginning of a very large shift in the housing market. Current inventory, just to go into what the actual inventory breakdown is. For single family homes, we went from 3213 last week to 3450 this week. That's up 237 new listings currently active on the market. For condos, which is everything else other than single family homes, that went from 1609 last week to 1725 this week. That's up 116. So we had a net gain of 160 last week. This week we have a net gain of 353. So again, we have close to 400 new listings on the market this week. That is net. So that means that despite homes going off the market under contract, we still have almost a surplus of 400 new listings on the market this week from previous week. Multifamilies, again, a little bit of an increase this week, 139 up to 143. That's a gain of 4. And then we also had foreclosures did increase 7 this week, from 37 to 44 this week. That does include short sales. And I do have a story on foreclosures this week, so stick around and we will talk about foreclosures, what's going on with them, and why the upticks are starting. Interest rates, as of this week, I'm glad that I held off one more day on this week's interest rates and did this video on Tuesday, because just from Monday to Tuesday, the rate went from 5.04 yesterday to 5.6 this morning. So That's over a half a percentage increase. So I am glad that I waited before I did this video. But it did go from 5%, just about 5% last week, to 5.6% as of today. So that's quite a significant hike. Bank rate still had the average 5.39 last week, went to 5.27 this week, so that's down a few basis points. But overall, the average is still right around 5.3 to 5.4 percentage points for a 30-year mortgage. As we've been seeing over the last several weeks, the market is starting to shift in favor of buyers, albeit slowly. But for those of you that have been waiting patiently and are getting ready to make moves when it fully shifts, you might be interested in using our free home hunter service. We've already found several off-market deals for clients in the current market conditions, and it's going to get even better as things continue shifting. There's a link in the description to check it out if you're interested in learning more. All right, let's move right into the headline highlights. The first one I want to start off with is just more of an informational purposes for you guys as viewers and potential buyers and sellers. One of the things people are always asking me about what's going on with the interest rates, the mortgage interest rates, and I wanted to give you some insight on how I usually tell where the interest rates are going to be going next, even before they happen. So I provided this this actual graph and chart from Fred, and I overlaid it. So you can see the one on top, which is in red, that's the 30-year fixed rate mortgage rate. The one on the bottom is the 10-year yield, treasury yield. So although it's not a exact correlation, you can see that it is almost exact, or as close as it can really get. And every time the 30-year goes up, you can see that the 10-year is also going up in the same amount about. So on average, you can look at the 10-year bond, what's going on in the market there, and you can usually add around 2.5 to 3 percentage points on top of that, and that's going to give you a pretty close estimate of where the interest rates are going to be for the 30-year fixed mortgage rate. So as you can see towards the end here, we have seen that the rates, the 10-year yield has been going up, and right in sync with that, so did the 30-year mortgage rate. And then right at the very end, if you take a really close look at this, you can see that it did dip a little bit, which has been what's been going on over the last couple of weeks. We saw the interest rates go up to about 5.5, and they dip back down to almost 5%. Same thing with the 10-year bond. That's what happened. So if you want to know where the interest rates are going next, just follow the 10-year bond. Pretty easy way to do that is the IEF, is the stock ticker. If you're looking at that on a Webull or Day Trader, or actually if you just look it up online, it will be the inverse of that. So if you see the stock ticker is going up, the interest rates are actually going down about the same amount. So that's one really easy way for you guys to tell what's going on with the mortgage interest rates and where it's headed next, and I hope that comes in handy. Moving on to the next one, we're going to talk about foreclosures, because there have been upticks around the country for foreclosures. There's been data coming out, although the last release of data showed that the foreclosures did not go up and actually declined a little bit. But one of the big questions is what's going on with it. So I wanted to show you this chart, which shows actually the 10 states, the top 10 states with the longest average times in foreclosure. Us being in Florida, we're actually number 7. So if you take a look at the chart, the yellow bars go up to the amount of days. So Florida I have circled. If you take a look at that bar and trace it back down, it shows that it takes on average for a foreclosure 1,500 days. So we're talking about years for a foreclosure to actually come to market. Now keep in mind, we were also under a memorandum, right, for the foreclosure, moratorium, a memorandum. A moratorium for the foreclosures for 2 years. So now add another at least year or more to get those foreclosures coming to market. That's not including that the other reasons why foreclosures can take so long. I have 4 of them stated here on the next slide. Foreclosure moratoriums and mortgage forbearance programs, which we just talked about, came out with COVID-19. There's also mediation laws. Some states, cities, and municipalities have passed foreclosure mediation laws that can delay the foreclosure process. And then one of the other things here is changes to the mortgage servicing laws. So for example, a mortgage servicer generally can't officially begin the process until a borrower is more than 120 days overdue on payments. So we've been getting a lot of stats that show that there have been upticks in 90 days, but it's not until at least another month when that person can actually start to go into the foreclosure process legally. So those are some things just to keep in mind. And while we have seen the uptick coming in, I think we will be seeing more foreclosures come to the market, especially now that the conditions in the market have really shifted the other way. But you never know. We really don't have really solid data that points to how many homes will be coming to market, and how, especially with how this everything that's going on in the economy, how that's going to affect everyone. All right, moving on to the next one. So we did see a wave of layoffs starting, and that started in the tech sector, and that's really because of really what's going on in the tech stocks. One, the stocks have been crumbling because of their actual earnings that have been coming out lately, which is showing that the companies aren't making as much money as they hoped or projected that they would be. So a lot of people are cutting out of those stocks, which is decreasing their revenue even further, and that's leading to layoffs. So this is just a shorter list of the ones that we already know about, the major ones that we know about. Carvana, 2,500 people let go. Reef, 750. GoPuff. Better.com, we already heard about that several weeks ago. 4,000 employees gone. Peloton, their stock I think is down like something like 80 or 90% right now. So next story is actually a recession warning. Sales of new homes plunge in April. This was on Politico. New home sales fell 16.6% last month from the revised March figures, so this is after the revision. Sales were down 26.9% from April 2021. The April drop for new home sales is a clear recession warning, said Robert Dietz. That is the chief economist for the National Association of Home Builders. So, if the home builders are saying this, that's not really great news for inventory coming to market as far as new inventory, because they're probably going to be hedging their bets and slowing down on their building, especially with the number of new homes that have been put or are coming to market. There were an estimated 444,000 new homes for sale in April, a supply of 9 months at the current sales rate. And just to put that in perspective, right now the national inventory is right around 1 to 2 months of inventory. In a regular market or a balanced market, which would be neither a buyer's or seller's market, 6 months of inventory is what we're looking for. Anything over that, which in this case is 9 months, would be considered a buyer's market. Anything under that, which is what we're really at for resale properties, around 1 to 2 months, that is considered a seller's market. So this will put that in perspective as far as what's going on in the new construction industry. So if you are a buyer, that is a space that you may want to consider starting to look at, because builders have now started to re-incentivize buyers to work with them, and in some cases are paying quite a bit of the closing costs and putting a certain amount of money down for those homes. Next one, home sellers in migration hotspots increasingly turn to price drops. So this was right out of Redfin. It has to do with a few markets, but one in particular in Southwest Florida that I wanted to touch on. Boise, Idaho, where home prices are up 62% in the past 2 years. So for those who, I hope everybody at this point knows that this is not really it's not an organic growth for home appreciation. 62% in 2 years. Usually on average, you're looking at anywhere between 3 to 5% in really good markets. Appreciation for home values. 62% in 2 years is just crazy. 41% of home sellers dropped their prices in April, and it is no wonder why. What I really wanted to point out here, so that's up 10% from a year ago by itself, but Cape Coral, Florida, that's 33%, so that's right in our area. That's 33% increase over the last 2 years. And markets it's one of the top 5 markets actually nationally that's driving the rate of price drops to its highest level since October of 2019. All right, so that pretty much wraps it up for the headline highlights. I hope some of those things will help you as buyers and sellers. Sellers, obviously, you want to keep an eye out for what is going on with the mortgage interest rates, because if they continue to go higher, it's going to be a lot harder to sell your home. Also, keep in mind that as inventory continues to increase as a seller, you're going to be competing with a lot more sellers. So in that case, most of the time, supply and demand, or the law of supply and demand, is going to dictate that you'll probably need to undercut your competition in order to get your home sold if you really need to get it sold. Unfortunately, in that kind of a shifting market, that's where a lot of these problems will start, where it's, whoever needs to sell their home is going to undercut the other competitors, and that can lead to pretty much a pretty quick spiral of race to the bottom, if you will. On the other hand, buyers, keep an eye out on the stock market and that 10-year bond, because if you do see the signs of that starting to head the other way, that could indicate that mortgage rates will be decreasing, which is going to give you a better opportunity to purchase a home at a more favorable monthly payment. Some of the other things to keep an eye out on are obviously going to be, what's going on with the economy. There's a lot of stuff going on in China that's been playing out for some time now, but it's starting to get pretty bad over there. There's plenty of stories on, if you go on YouTube, search that. There's a lot of stuff going on there that's kind of worrisome, and it's kind of showing remnants of what 2008 was like for us in their own market in real estate, as well as just the amount of dollars that they don't have over there to pay back their debts. Plus we have Russia that is potentially defaulting. We have a lot of stuff going on in the Middle East as far as food shortages and just political coups of sorts. So there's a lot of stuff going on in the economy right now, and I hope everyone is paying attention to that. At the very least, subscribe to my channel, and I will try to keep you up to date with the biggest news that is going to be affecting not only our economy, but our housing market specifically. So, but like I say every week, this is just what I'm seeing in the market. This is my data that I'm gathering, and I'd love for you guys to share as much data as you can about your markets. What are you seeing happening? Because that helps me fit together a more complete picture of what's going on in our overall economy. I hope you all stay safe, and I will see you in the next video.